Yeah, I'll just have to buy XRP and some other stuff instead.
Yeah, please don't buy XRP. That's I don't care what anybody buys. You can have your own opinions, but if it's Doge or XRP or GameStop, just GameStop at this point, by the way, it's pretty much a cryptocurrency. I don't think there's any asset value behind it. It might as well be XRP, right? I think there's a few leftover stores and malls that they're trying to sell shelves out of.
Right.
Because all the games are gone, right? I mean, who would have known, right?
Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
Hi, everybody. Welcome to another episode of the Bitcoin Basics podcast. This is Ferris. I'm here with Gordon, and Gordon will introduce a very special guest on a very special occasion for us today. Before we do so, this is our proof of recording. The price of Bitcoin is $34,895. The block height is 668,781. And it is Tuesday, the 2nd of February. And Gordon, I'll leave it over to you. Who is our guest for today?
On our 100th episode, Faris, we have Stephen McClurg, who made his second appearance. So we're delighted for him to come back, especially on our 100th episode. So we really appreciate that. And Faris, this was right up your alley, investment, non-tech stuff. So, even I learned a thing or two, but Stephen is incredibly knowledgeable, especially about the macro markets and his new company, Valkyrie, getting into the Bitcoin ETF. So I found it enjoyable, even though I'm not a hardcore investor. How about you, Faris?
Oh, that was a lot of fun. So yeah, we went straight in. I think we started off talking about GameStop. And then, talking about the Bitcoin ETF, which is actually really interesting for a lot of reasons. Even if you don't intend on buying an ETF, it's good to know what the price correlations and causations are with ETF. So we talked about how when the gold ETF came in March 2003, how that affected it. We talked a lot about inflation because we are starting to see inflation in the markets at the moment. And I don't just mean financial markets. We're seeing inflation in commodities and stuff that you buy at the shops, and how will that affect Bitcoin? So yeah, this is really crucial times for Bitcoin right now because we are seeing hedge funds come into Bitcoin a lot more. We've had people on this show who were anti-Bitcoiners turn around and say, yeah, okay, we see the value in this, and that's really starting to pick up.
Yeah, absolutely. So without further ado, we'll get into it. And even if you're someone like me who's not an investor, I'm not really interested in the investor and financial side of things, whether you got Bitcoin or not, I found it fascinating, and Stephen has some incredible insights. So here we go. All right. Well, welcome everyone to our 100th episode. Streamers and balloons popping in with the magic of post-production here. So I've got Faris with me as well, but we've got a special 100th episode and couldn't think of a better guest. Today we've got Stephen McClurg. It's his second time that he's been on the podcast. But instead of me introducing him, Stephen, tell us about yourself and go from there.
Yeah. Hey, thanks so much for having me for a second time. I certainly wouldn't have me twice after experiencing me once, but I'm the CIO of Valkyrie and also the CIO of Basket, which are two different types of blockchain companies that I'm involved with. We're very actively pursuing a path to asset management in the blockchain world. Valkyrie very focused on Bitcoin products, everything from grantor trust to ETFs. To anything else that we can put a security wrapper on regarding Bitcoin and other digital assets is what we're up to.
And before we get into all that, Stephen, I want to ask you about basket, BSQT. I had a look at CoinMarketCap. It's not there. What have you guys created? A stable coin?
Yeah. So we're working on a really fun project there. It's actually it's very similar to what Facebook tried to do with Libra, where we're looking at a basket of currencies that all fit inside a stable coin. So, we think that people will be a little bit wary of the dollar going forward, and a basket of currencies probably make a little bit more sense. But more to come on that later. It's slightly stealth, but not too stealth.
So I can't get onto Coinbase and purchase some BSQT right now.
That is correct. That is correct.
Yeah, I'll just have to buy XRP and some other stuff instead.
Yeah, please don't buy XRP. That's I don't care what anybody buys. You can have your own opinions, but if it's Doge or XRP or GameStop, just GameStop at this point, by the way, it's pretty much a cryptocurrency. I don't think there's any asset value behind it. It might as well be XRP, right? I think there's a few leftover stores and malls that they're trying to sell shelves out of.
Right.
Because all the games are gone, right? I mean, who would have known, right? Well, here, you want to hear something really interesting? We're going, right? We're going. Are we
I was
jiving?
going to ask you about GameStop and silver anyway, so let's go for it.
Well, let's talk about GameStop for a moment. So not many people know this, but I actually took a break from traditional finance many, many years ago and worked at a video game company called Electronic Arts. So that was back in 2007. And it was when the iPhone was coming out, and we were looking at making acquisitions of companies in Japan and South Korea at the time, because Japan and South Korea had a really strong consumer-focused, we'll call it a smartphone base, where the rest of the world, particularly the developed world, was still really commercially driven. So everybody had a BlackBerry or a Palm Pilot, but if you didn't have one of those for work, you pretty much had a flip phone that, the only thing that you did outside of calling people and texting people was playing games like, Snake or Tetris. So South Korea and Japan had already developed, consumer-focused smartphones, and was 5 years ahead of the rest of the world when the iPhone was coming out. So we kind of made this big bet. I actually helped start the iPhone game division at Electronic Arts, and my focus was really developing the behavioral science or the behavioral economics behind how the games would function, how you would pay for them. Because in the past, when you bought games on a cell phone, it was like 99-cent monthly charge. And then you have console games, which you go out and buy you go to a store, you buy a package, you bring it home, you plug it in, which is a different business model. But we were kind of seeing a new business model emerging with the iPhone. And back then I kind of predicted that, it wouldn't be long before people would stop buying packaged goods for games, right? You would just be able to download them directly, just like you were able to on the iPhone. So it doesn't surprise me that a brick and mortar store like GameStop that's selling packaged goods, packaged games, went out of business when you can just download Fortnite on your Xbox or your PS5, or download any other game. You don't have to leave the house. You just download it for the same price, and it's there, and it doesn't scratch. I don't know if you guys had ever had the Wii. You had the little disc and you put them in, and Wii was really cool at the time, but man, every one of my games on the Wii scratched up, and you can't even play them anymore. So things don't scratch when they're downloaded. There you go.
Oh yeah,
GameStop.
No, that's a really good point. So yeah, that's one thing we were actually going to bring up with you, was your experience or your opinion on GameStop. And I'm keen to talk with you about inflation, because I know I've seen you tweet a couple of times about inflation. But before we get into that, can you tell us about your Bitcoin ETF coming up, Stephen?
Yeah, well, we hope to launch a Bitcoin ETF soon. We filed for the privilege to try to launch one. We expect to spend a lot of time with regulators talking about it over the next couple of years. But we think that the market is a little bit more prone to having one now than it was even a year ago, 2 years ago. If you asked me 2 years ago if the SEC was ever going to approve a Bitcoin ETF, I'd say, yeah, probably not. My opinion has changed quite a bit in the last 6 months.
And with this ETF, sorry, you go, Gordon.
I was just going to say, because Stephen lied to us, and I'm going to quote, because I listened to our last podcast, and I quote Stephen, Bitcoin ETF doesn't make any sense at all. And I'm paraphrasing. You said, 1, because not favorable to regulators, and 2, peer-to-peer cash use case really isn't what Bitcoin is about. We're looking, ETF is like a speculative use case. So obviously you've changed your mind.
I've changed my mind on one of them. I haven't changed it on the other. But I'm glad you brought that up, Gordon. It's, those are both very fair points. When we last spoke, I did have the opinion, like I said, it's changed in the last 6 months, that regulators would just never get it done. But here are the things that have changed. On point number 1, and I will address point number 2 because that's very important. On point number 1, what has changed is the way that people are looking at Bitcoin and the way that the industry is handling its customers. You have Anchorage that has come in with a very good custody solution. It's very secure versus what the solutions had been in the past. Gemini and Coinbase both feel like a lot more like a very professional shops that I'm used to dealing with, in my rounds in traditional finance. Coinbase is a really good example of they made this acquisition of Tagomi, which is a trading platform, but then they built this team around that and created a whole new division called Coinbase Institutional, and brought in even Brett Tejpal from Barclays, who's former prime brokerage services in the UK over there, to head up that group. And he has very much professionalized Coinbase on the institutional side. When I deal with them, and we are a client of theirs, when I deal with them, it feels like dealing with Bank of New York Mellon when I was a client of theirs, managing money in the past. So and that change has really only been made even in the last maybe 3 months. Or maybe it could have been a little bit prior to that. So the custody solutions have become very professional. Security is now there. Insurance on custody solutions is there. Trading, manipulation, all of that has certainly changed, and it's going to continue to change and get better as the price continues to go up for Bitcoin. And then even in the last 3 months, you've had a lot more institutional interest in holding Bitcoin. Everybody from BlackRock to Guggenheim. And by the way, the top 5 fixed income money managers include BlackRock and Guggenheim. If PIMCO and DoubleLine gets into the mix, I think that we're really going to see something. But the fact that you have real institutional players, real institutionalized trading platforms, and custody has changed my mind there, and I think the regulators, of course, see it as well. And I think that it's going to keep moving in that direction.
And is that the main, sorry to cut Faris off, is that the main benefit of an ETF? You get access to Bitcoin's price, but you don't have to deal with all the operations, security, and custody of it? Or are other things at play?
No, that's exactly right. I mean, you named all the benefits, and it's not just the Bitcoin ETF, when it comes, but also, Bitcoin a Bitcoin grantor trust, which is something else that we manage. You don't have to deal with security and custody. We do, right? You don't have to deal with compliance. We do. And if you are a insurance company or a pension fund and you want to get access, it's the best way to get access. Right. There's no pension fund manager is going to go out and buy physical Bitcoin and hold it in his treasurer, right, on behalf of the, pension fund that's all public employees. Right. That's never going to happen. Insurance companies, same way. Really, the only way to access it is through, like a trust product or an ETF, or even, a hedge fund too. But hedge funds do treat it a little bit differently. It doesn't make a whole lot of sense to buy a hedge fund that only owns Bitcoin if that's really all you want exposure to. And by the way, if I'm a pension or insurance company, I don't want exposure to, Ripple or to, some of these other things. I only want exposure to Bitcoin.
So what you're saying is your entire ETF, the Bitcoin will be on one Trezor behind your big shelf?
No, we would actually, we would use one of these more professionalized custody solutions for the ETF. I mean, you just can't, store Bitcoin on a Trezor and say, hey, SEC, here's all the Bitcoin right here. They want to see that you're holding in a third party, custody solution that's bankrupt remote, that's in its own wallet, separated from everybody else, that has insurance, has all the features that a normal security might have, even though Bitcoin isn't a security in the US.
If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself.
That's something really interesting I want to bring up was, you're talking about pension funds getting into Bitcoin, and obviously they can't at the moment. The first gold ETF in the US was March 2003. And we then saw, and when we're talking about pension funds, there's a lot of money behind those coming in. Yeah, in March 2003, gold was about 300, and over the next 10 years, it went up to $2,000. We'd presume we'd see the same thing in Bitcoin, I imagine, just more money coming in. And, the stock to flow ratio of Bitcoin, naturally you'd think that, yes, we would see such a huge price increase in Bitcoin coming in. And a point you alluded to, which Bill Miller was recently on the news saying that the higher in price Bitcoin goes, the more secure it becomes.
Yeah. That's absolutely right. Not only is it more secure, it's also, and this is where I more care about as a trader, price manipulation becomes less and less and less. It's no different than some small company, some micro cap company listing on the pink sheets, that's worth $50 million. It's really easy to pump and manipulate that price. GameStop is a great example. When there's barely any float and there's not much market cap, you can post something on Reddit and drive the price up very quickly. When you have a company the size of Apple or Microsoft, potential manipulation definitely goes down quite a bit. So as the market cap of Bitcoin goes up and it's in more and more hands, more and more wallets, more and more traders involved, that piece changes as well. And that's another piece that the SEC is looking at.
Is there the potential, because I know this is, whether it's conspiracy theorists or people upset if the price of gold goes down, the gold bugs don't like when gold goes down, obviously, that the paper market or the derivative market for gold affects the physical price of gold, that there shouldn't be a correlation there, but there is. It's kind of broken the real value of gold because of the large derivative market. Do you think that's the case? And if so, could that be a threat to Bitcoin in the future?
It could. And I actually, derivative markets for physical assets or even physical digital assets, if you want to call it that, definitely can help move those commodities or those collectibles. Gold being one of them. But the problem with gold is the very nature of how gold is bought and sold. for most people, if you want to actually buy gold, you have to go down to one of these like pawn shop looking stores down the road that says we buy gold. And you're buying gold bars and the spread's really big because it's brick and mortar and the guy's trying to make a bunch of money. It's a very, kind of pawn shop feeling, to be able to do that. If you're buying it in bulk, it is a little bit different of an experience, but it's still very expensive. There's a big bid-ask spread when you're buying physical gold. Whereas derivatives is a way to just play the price action of gold through the derivatives market, and things like oil, for instance. Speculation is done in derivatives on a lot of these commodities, and they do move the price. When you have something like Bitcoin that's already a digital asset, similar to equities, right? The value of the equity is going to drive the derivatives more than the derivatives driving the value of the commodity. And I think gold is, I think Bitcoin is going to behave more like equities in relationship to derivatives than say a commodity in the long run.
I'm keen to get onto inflation now. In our last podcast, you nailed commodities because commodities were still basing. We did see a bit of a surge in them, especially in the grains. They're starting to take off. I'm surprised by oil doing as well as it is. I think a lot of that is just production of oil, but a global economic shutdown, you think oil will be coming down and it's doing quite well. Yeah. So one thing I want to look at is when people talk about inflation, I think you need to nail down, what are we talking about? We're talking about inflation in the equity markets, inflation in services, inflation in goods, commodities, because we're definitely not seeing inflation in wage growth. So
right.
When you're talking about inflation, Stephen, where are you seeing inflation?
Well, anytime I say the word inflation, I mean something very specific, right? I grew up in a blue collar family. When I think about inflation, I think about, okay, what does the average working family need to do to buy things? Right? Like that's how I think of inflation. When economists or government officials talk about inflation, they're talking about CPI, some formula that was created, by the U.S. government and by other governments to put some kind of peg on what's happening. I could care less about CPI. I care about, what does the average working family have to do to live, to eat, to pay rent, to do all the things necessarily to live. So so that's what I mean when I talk about inflation. And I see a lot of inflation setting in right now, right? And by the way, that does include things like energy, right? It includes rent, includes energy, putting gas in your car, having, to go to work. The average family doesn't have the luxury of working from home. And then putting food on the table. So food prices, I think, is really going to inflate very soon. And there's two main reasons for that. One of them is freight cost. Freight has become extremely expensive. A lot of that is because of COVID. And a lot of that's going to remain in effect. There is a trade imbalance is also happening, and I'm going to speak from the perspective of the U.S. In the U.S., for instance, the U.S. is primarily a net importer of goods, right, and a net exporter of services. If you look at a year ago, and I'm in the LA area, right? I live in LA, and I look at the Port of LA and what's happening there. Generally, the Port of LA, when it sends containers back out to, say, Asia, half of the containers are empty. When it receives containers in, 100% is going to be full. Today, 2/3 going out from the port are empty to resupply. So what that's telling me is that we're importing a lot more goods. There is a supply chain break within the U.S. There's a big disruption here in the U.S. And a lot of that disruption is happening in food, right? Primarily in California, but in other areas of the country. So we do expect to see food prices go up. The other thing that's happening is that we do have wage. We don't see a lot of wage growth, but there is an expectation that minimum wage is going up. And that causes most commodity prices to go up as well, including food, right? And if you think about where you buy your food, where you grow your food, most of the people that are picking the fruits and vegetables, that are shipping it, that are involved in the whole supply chain process, and even people working at the grocery stores mostly work minimum wage. So when you increase minimum wage, food prices go up for everyone, and people that aren't at minimum wage but are lower paid are going to experience zero wage growth, extremely high commodity price growth. Gasoline, oil, that's another thing you brought up. Oil just hit $50 a barrel, which it's not too surprising because oil went negative at the beginning of last year, primarily because everything shut down. There was no demand for all the supply. But that demand has started back up again. The supply is being shut down more. But really the price of oil has more to do with the dollar going down in value than price of oil going up. So that's another thing to really consider as well. That dollar's value is depreciating against a lot of these commodities and other types of assets.
Just going back to that food thing, Stephen, are you kind of worried about the seemingly increasing protectionism of a lot of countries and not exporting as much and sort of keeping food in-house?
I think that could happen. We did have more protectionist policies during 2020 here in the U.S. And then that has now changed quite a bit with the new administration. But I think that if we get to another point to where food becomes scarce. And by the way, if you've noticed, the weather patterns have changed quite a bit in the last couple of years through this El Niño season. So there's rainfall in places that's not supposed to be rainfalls, or snow in places where it snowed in LA. There's been high winds. It's been dry. I mean, it's been all over the place, and that obviously affects farming. So if it's a bad farming season, it's difficult for a country to export food when their people aren't eating. That being said, if they're getting enough money for that food, it will be exported if there's enough demand for it. So we'll see. I don't know the answer quite yet, but it is possible.
So just on the dollar there, Stephen, and this is something that I've heard as well, other economists speak of, is so the dollar at the moment, just in the last few days, is basing. It looks like we might have a short-term bounce against, especially like the euro, the sterling, and the Swiss. It's just been grossly oversold. Mm-hmm. But there are a lot of people that are buying, like there's I don't know if you want to call it a bubble, but a lot of people buying Pokemon cards, basketball cards, people essentially getting out of currency and into anything. Right. Now, is this related to potential inflation or a lack of trust in sovereign currencies, and especially maybe people realizing the declining purchasing power of a sovereign currency?
I think institutions, and by the way, this has always been the case for institutional investors, that you don't want to hold dollars because you'll just be depreciated to nothing. That's still true, that they're trying to put, there's money on the sidelines that they're trying to put to work on anything, right? And by the way, yielding products like bonds isn't a great place to go, right? Because they don't yield enough for you to get the return profile that you need. So they're stretching for other risk type assets. Being at a higher allocation to equities or private equity, or even digital assets like Bitcoin. But I think the general consumer who is buying, I think it has less to do with distrust of the dollar it has more to do with FOMO. People are seeing other people making all this money. The markets have been up, crypto's been up. It's like, oh, I don't want to miss the move. I got to get in. One of the best things for equities is other people talking about how much money they're making in equities. And you hear, and even this like movement into, oh, they're going to pump GameStop. I got to get in GameStop. Oh, they're going to pump silver. I need to get in silver. Oh, now they're going to pump Dogecoin. I need to get in Dogecoin. How do I buy Dogecoin? Like this is what I see on my on my feeds. People asking how to buy Dogecoin, and people that have been around a little bit saying don't do it. And then somebody's making 20x, but I missed that 20x. I'm like, no, you didn't. You missed buying it at the top and losing all your money, right?
Yeah.
So I think that's what's happening. People have money sitting around, and rather than just saving it, they're like, well, what good is saving my money, right? I can earn 1%, or I can make a gamble and try to make something. And by the way, if it doesn't work out, the government's going to give me a check next month. So who cares, right? Like, there's another stimulus package coming. Here we go, right? So I think that's really what's happening. The average person is seeing, money coming to them, money sitting in their bank earning nothing, and all these other people making money. So hey, let's go. Let's get a Robinhood account. Let's start trading.
Yeah, this is something I was going to ask you, because you had guys like Stan Druckenmiller, one of the greatest traders of all times, who lost money going short with coronavirus. And you think, if there was ever a black swan event, this was the mother of all black swan events. But stock market's at all-time highs. And we've just seen, government is handing people money. People are stuck at home, jumping on Robinhood. Yeah. How big an issue will this be? Scott Galloway tweeted recently just how it will affect the psychology of people staring at Robinhood and just that FOMOing into stocks in and out. But not only that, what happens if that stimulus is taken away? What's going to happen to all that money that was going into the share market?
That's a really good question. And by the way, I don't think it's even stimulus money too. It's just, people have more disposable income that are able to work from home, but not go spend anything, right? So you can't go to the store and stop, and you can't go to the store and shop. You can't go sit in a restaurant. So it's like, okay, well, I've got this money that I would have spent on that. Might as well make more money. It's a game, right? It's video games have gotten boring. They played all that they can play sitting around at the house. Let's play this other cool game where I can make money or lose money. And that's really what it is. That's the brilliance of Robinhood. They've gamified stock market investing. So that's really it. Even if the stimulus checks sort of go away, I don't think they will. I really believe that the current administration will not only pass another round of stimulus package in the U.S. that'll be, $1,400 a person. By the end of the year, it wouldn't surprise me if there was basic minimum income in the U.S. And people will just get, whatever the equivalent of minimum wage is as a base, right? So that's more money that can be, put in the markets. Now, you're right. It does, the punch bowl does eventually get taken away. You do get to a point to where the dollar is just, so much has been printed, it's not worth anything anymore. And by the way, we are starting to see that against other governments, right? So if you look at China's a really good example. China hasn't really printed more money, whereas the U.S. has. So, other countries are printing a limited amount of money just to stay competitive with U.S. exports. But at the same time, some of them are just saying, yeah, we're not gonna go there this time. We don't need to. So yeah, it'll be really interesting to see what happens. I don't quite have a prediction on what that will look like just yet. We'll see how that plays out over the next few weeks or months.
I don't know if you've seen the film WALL-E, the Pixar one. It's this is when I'm looking at the world in 2020, this is what it makes me think of, just people stuck in these automated chairs, moving around, not doing anything, staring in front of a screen. This is going to have huge effects down the next generation. Just stuck at home, not being not contributing much to society, but also just being fed money to continue to stay in that state of just dormancy. So,
well, it's funny because
It's pod life.
you paint that side of Wall-E, but I think that's going to happen, except we're going to be doing it in spaceships, just like you do in Wall-E, because at the moment, I mean, how many people are ordering takeout at least once a day in styrofoam containers, plastic bags, plastic forks and knives wrapped in plastic? And what are we, I mean, I would assume that people probably consume, when I say consume, they produce 3 times more trash than they did pre-coronavirus, right? In California, we had this whole thing about, getting rid of plastic, that they started charging for plastic bags. They got rid of straws because it was hurting the turtles, got rid of any type of plastic. Well, all of that's come back. It's all back. Nobody cares about the turtles anymore. It's all about let's put things in like 7 layers of plastic before we ship it out. So yeah, if you remember from that movie Wall-E, they were in the spaceship because they essentially ran out of room on Earth because of all the trash they produced.
I think the only difference will be you'll have unemployment UBI, but we'll be eating bugs.
Yeah,
Everyone will be eating bugs. No meat.
Now we're sounding like Snowpiercer.
we went really dystopia very quickly, didn't we?
Yeah.
But it does create a valid argument, and here's why I say this, right? There's been all these weird TikTok videos where these young couples, and I saw this one where this young couple basically is explaining to people how to make money.
Oh, yes.
Have you seen this one?
Yes. Oh my God.
How you make money, and we don't work anymore. All we do is if we see a stock going up, we buy it. If we see it going down, we sell it. And that's how you make money. And we're able to sustain our lifestyle by doing this. We don't have to work anymore. We travel and we trade stocks, because if it goes up, it's going to keep going up. If it goes down, it's going to keep going down. We just buy and sell. It's simple. We're 24 years old. We've got it all figured out. Now, let's assume that they're not the only ones doing that.
No.
Right? So now you have like a whole subsection of society that has become really not productive. All they're doing is trading a market that's going straight up. What happens when that market drops, right? I mean, everybody was geniuses between 2004 and end of 2007. Everybody was a stock market genius, right? Everybody's a genius in a bull market. And then what happened after that, right? Everybody lost their house. That's going to happen. It's just a matter of time. But if you have this whole group of society that, before they were just sort of day trading, but they still had regular jobs. We have a whole group of people that are just buying and selling and thinking, oh man, what were my parents thinking? So productivity levels are going to go down. GDP, by the way, was down in the US this last year, despite the stock market being up. And then you have universal basic income. Okay. So let's say these people lose a ton of money in the market, or who cares? I've got universal basic income now. I'll just live off of that and we're cool, and I'll try to trade it and get it back. So yeah, it could cause GDP to drop pretty significantly. Look, I'm not saying I'm for or against universal basic income. I'm kind of undecided, but that is definitely a negative.
Yeah, that's something I'm thinking of. I mean, we are looking at the global economy now like a video arcade game. It's like that. That's the business model at the moment.
Yeah.
But something I've been thinking of is I'm looking at, okay, we're at home. There's a whole commuter economy that is missing out. So gas stations, cafes, just you leaving the house and going to work. That's that whole commuter economy. And then a lot of businesses are no longer going to be renting the retail space. They're going to say, okay, working from home worked well. Let's at least have half the business place working from home. Wouldn't that be deflationary? Just all that money coming out of the system?
Well, there's an interesting phenomenon that happens when people have either lost some income or prices have gone up and they haven't been able to consume for a period of time. It's a behavioral issue where it's pent up demand, right? Like people are used to this one lifestyle. They've lost it for a little bit. That demand pents up, and then they overspend during that next period, and then it levels back out, and then it reverts to the mean. Excuse me. That happens with restaurants or retail buying, or so there is pent up demand, but the other side of that is if that period of time where you're not consuming happens for too long, then the new mean pulls in and the mean is lower. So that pent up demand won't be as high. And then the reversion to the mean will be much lower than the former mean would have been. And as lockdowns globally can continue to persist, that pent up demand does slowly go away, and the mean does certainly go lower as well. So that is something that we really have to consider when things go back to normal, so to speak. So there may not be the type of consumerism that we were previously used to. But by the way, there was a period of time between, it was about 2010 through 2017. And that is where global travel really, really picked up. So people felt poorer during the Great Recession, even if they had jobs. Right, the stock market dropped. You don't spend as much money when you have a perception that you have less money, even though you're making the same, your income's the same, but your portfolio's down. And travel ceased and ended, and then that pent up demand picked up, and then there was like this global renaissance of travel, right? Airlines started traveling more places, and people were taking more breaks. Or like, hey, I'm not going to the 10 years previous to the Great Recession, people worked harder, traveled less, and they realized, hey, life's too short. I'm gonna spend the time on the road. And that was kind of an interesting pickup in the travel industry. But through COVID, that has certainly changed. People just aren't, and I kind of said this about a year ago, a little less than a year ago, and I may have said it on your podcast, that there will be a change to global travel here, right? I mean, people just aren't going to want to get on a plane regardless of if there's vaccines or regardless if COVID goes away. It's just, people now act like me, like I always have. I think everybody else is dirty. I've always stood 6 feet apart from people, washed my hands frequently. If I see somebody sneezing, I walk the other way. And I represent a small portion of the population. Well, in the last year, everybody's turned into me. And some people have gone even further away and won't even leave their homes. So imagine now, a year from now, people going out and traveling and getting on a plane. Planes are the dirtiest things you could possibly be on. Right? You're just breathing everybody else's recirculated air all the time. So, don't want to create another dystopia, vision for you guys here. But that's what I think every time I get on a plane. I'm like, okay, well, flip a coin. I might get sick here. Right. But I think other people are thinking that way too. And I don't think that perception is going to go away. This is a new normal.
I noticed something funny like that. I was playing basketball with my kids, and my daughter was guarding my son, like 8 and 10 years old, and she was guarding him really closely, and he was getting really frustrated. And he just yelled at her, "You're not practicing social distancing."
Well, I in high school, I was the center on my basketball team, and so of course, and I'm 6'5", and that's fairly tall for a high school basketball player. So of course, whoever guarded me was like always right on top of me all the time because I was so tall, and it frustrated me. I hated basketball because of it. Like, no, I want to play point guard where they like give you a little bit of space. I don't want to be the center. But is what it is.
So I see. So if we're looking at an inflationary world in commodities, and we're looking at, people talking about the K market recovery, where the middle class will continue to dwindle, the uber wealthy will get more wealthy. Will people have disposable income to put into Bitcoin? So with the Bitcoin ETF, I'm presuming that's not just for sophisticated investors. That's also for, funds to get into. But will everyday people have the opportunity to get into a Bitcoin ETF, or is it just easier for them to just go ahead and buy Bitcoin on an exchange?
Yeah, that's a really good question. Most people still maintain 401ks and IRAs, and when you have self-directed accounts or even models that you're playing in, really a Bitcoin ETF is the best way to do it there. If you are just speculating on the markets, look, I think more and more people, the average person is going to go onto an exchange and buy it that way. People are going to get more familiar with that, used to it. I really see these products becoming, more for institutions than your everyday person, right? And that's how I would behave too, by the way. I currently own GBTC in my IRA. I also own, the Valkyrie Bitcoin Trust, in my IRA. But as far as my own money, or when I say my own money, my money not sitting in an IRA, I just buy Bitcoin directly. So I think that's how the normal person is going to certainly operate. The other thing too, though, is and Gordon, this was the second part of your question that you asked 45 minutes ago.
Okay, I'm still waiting.
That I didn't avoid, by the way. We got talking about other things. Is I see Bitcoin as a peer-to-peer monetary solution for global use, right? So, do I still believe that? Yes, absolutely. And what I think is going to happen is Michael Saylor has started a trend where, hey, look, I've got all this cash sitting on my balance sheet. I might as well diversify my cash holdings. Bitcoin is a cash holding, right? It's money. So I'm going to have some dollars and I'm going to have some Bitcoin, and I'm going to buy many things with dollars and I'm going to buy some things with Bitcoin. Nothing wrong with that. If your cash is going down in value and your Bitcoin is going up in value, what's going to happen? You're going to move more and more cash over to Bitcoin. And I don't know. I think it's far away, but I think there's a world where most people just use Bitcoin. I can already go, with my Gemini app, I can go buy a Subway sandwich with Bitcoin if I wanted to. I don't. I spend cash on everything and Bitcoin on nothing. But if what you're holding is Bitcoin, you're not going to want to transfer it back into cash, or you can go buy something. You're going to actually want to utilize it. So right now we're in the speculative phase where people are speculating on Bitcoin growing the market cap so it can actually sustain global peer-to-peer cash use or cashless use. And once we get there, I think the speculation starts coming out of it and the usefulness starts going in. So on that subject, why does it work in an ETF if that's the case? Well, there are ETFs that exist where you can speculate on pretty much any currency around the world. I can speculate on euros, and it's easier to do that by buying the euro ETF or any other currency ETF, yen, South Korean won, doesn't matter. I can buy those ETFs and get that currency exposures as opposed to signing up for Forex and trying to, trade, exchange, trade a currency on an exchange. It's much easier to do. It's way more simple. So Bitcoin and ETF serves that same function. Allows you to speculate on a currency without having to go through the all the hassle of buying the currency directly.
That's a great explanation. Thank you, Stephen. I've really enjoyed it. So I'm all out of questions, Gordon. Do you have anything?
I have two more. Considering the SEC hasn't approved any Bitcoin ETF yet, why are they going to approve yours?
Yeah. Well, like I said, I think some things have changed, in some of the issues that the SEC has previously had with a Bitcoin product or Bitcoin fund. And, whether it's ours or somebody else's, Van Eck has also filed for one. I think us and Van Eck are going to be the first two to get approved. Van Eck has a long history of managing ETFs, putting together really interesting ones. They were, pioneers in gold ETFs, for instance. I think they stand a really strong chance. And then the team that we have as well, I think also has a very strong chance. We have a team that has a lot of experience in ETFs. I launched dozens of them when I was at Guggenheim, and helped build Guggenheim's ETF business from zero to $60 billion, right? So in a very short period of time, too, by the way. So building esoteric ETFs, managing them, distributing them, we have a team that's very apt to do it, as does Van Eck. So, I think that we're going to be the two that they're going to go head to head, and it'll be a friendly battle. We certainly are very close friends with the Van Eck guys and respect them and like them. And, but yeah, it'll be very, very, very friendly competition. But we'll have fun doing it.
Well, I imagine the two of you applying at the same time will actually, complement and support the cause rather than, it's harder to shoot down two applicants than one, isn't it?
Yeah, I think that's right. I think it's a good thing.
Yeah,
for sure.
What's the difference between Grayscale's Bitcoin Trust like GBTC and say your ETF?
Yeah. So really the difference between a grantor trust and an ETF is pretty simple. A grantor trust has a underlying asset, Bitcoin, that is what's considered its net asset value. That's the value of the underlying asset. But the trust itself can trade wildly in a range all around the value of what the underlying asset is. Because, really it's sort of like a casino. You can buy in, you can't really get out. You have to, sell into the market. You can't go out and redeem. So we've experienced, really high premiums on that. And I believe it even traded at a discount over the weekend or at the end of last week. With an ETF, you have constant creation and redemptions of shares. So somebody can say, hey, I want to buy that ETF. It might be trading at a slight, premium, and you buy in and it closes the premium. And then if it's trading at a discount, you want to get out, but you get out at the asset value, and that closes the discount. So what it does, it causes that spread between NAV and a premium or discount to narrow to basically nothing.
So, Stephen, with Bitcoin being a 24/7 market, 365 days a year, and an ETF effectively being 8 hours a day, 5 days a week, do you have to risk mitigate for opening gaps?
We've dealt with that before in other types of products. So for instance, you could have a product that, I used to, I launched this ETF that held Chinese bonds, right? And, they trade on the Hong Kong markets, the bonds themselves do, but then the ETF trades in the US during US market hours. So, that's just one example, but there are many ETFs out there that hold non-US equities, non-US bonds, other types of commodities that trade on a 24-hour basis. So I don't think it's actually, it's really not too much of a big deal. And even if you look at the stock market, right, you might hold a stock itself. It's not even an ETF. And there's some news over the weekend that causes it to move. You can do nothing about the news that happens over the weekend. You just accept the price that you get on Monday morning. So it's something that the markets are certainly used to doing. So I don't see it, in relationship to other things that have already existed. I don't see it as an issue.
Apparently, gaps get filled anyways.
That's right.
second last question for me. Apart from all this stuff, are there any projects that you're kind of excited about at the moment, tech or non-tech, blockchain, non-blockchain?
It's a good question. I can't think of anything off the top of my head. I'd have to really think about that for a moment.
I can think of one. PayDrop implementing Lightning payments.
Oh, now that would be a really good idea.
There you go.
PayDrop implement, yeah, that would be a great idea.
Okay, I have three hard-hitting questions for you, and you have to answer one or the other. You can't answer nothing. Ripple or Dogecoin?
Doge.
PlayStation or Xbox?
Xbox.
Bonds or bananas on the blockchain?
Bonds.
Okay, all right, we're done.
Thanks, guys.
Oh, thank you very much.
Thanks, Stephen. We couldn't have thought of a better guest for our 100th episode, so thanks for joining us. And yeah, we'll chat again at... Faris and I don't put a time limit, we just say a price. So we'll chat again at, say, 100,000.
I love it. That sounds fantastic. Can't wait.
Thanks, Stephen.
Thank you very much, Stephen.
Thanks for having me. Bye, guys.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.